Markets like pricing in future risk, and one of the interesting developments around the markets at the moment is what's happening in China. Some suggestions are that China is running into what is going to be a pulling back of the lockdown they've had for COVID-19, the spread they've had recently. Is China just about to enter the markets at full speed again? Let's now talk to John Mayer from SP Angel, who is a mining analyst and looks at base metals amongst other things. John, welcome. It's a pleasure to be able to catch up with you again. We've seen this rise in base metals recently. I know the headlines seem to be suggesting that China is preparing to exit this lockdown that's hit the economy so hard. What are you hearing? What are your thoughts on where the markets are going, considering this potential news?
Expectations are definitely improving on the China front, and markets are being driven by those expectations. Shanghai saw a falling number of COVID cases, which is great, and there's some hope that the 20 million residents in Shanghai will start to ease the lockdown. But unfortunately, Beijing is seeing a few more cases. Not many cases in Beijing. I think it's just about 20. But as the number of cases rise there, the risk of the Chinese moving in with this new dynamic lockdown policy or dynamic clearing policy may start to restrict movement in some parts of that city. In fact, I think the policy of dynamic clearing feels better than the whole-scale lockdown of cities. So it may be that China has got a better way of catching COVID earlier and just locking down smaller parts of its economy rather than very large parts with multiple cities that have been locked down, certainly in the last couple of months.
Yeah, let me just quickly run through some of the charts, because I think it's worth looking at this in the context of what I was talking about at the top. I want to take a look, first of all, at the price of copper, 94.86. This rise that we've seen here has been repeated across a number of other commodities. Zinc, very similar sort of gains we've seen over the last week or so. Aluminium is another area where we've seen some interest again. How would you describe the market anticipating this news of China and the possibility that we could well see a more open economy now, because they seem, at least in part, to be on top of this? As you said, we still don't know for sure, but clearly markets wanting to price in some upside. How do you describe what we're seeing in the base metals markets at the moment?
Well, China, the world continues in China. Manufacturers are still continuing. There's lots going on. Even when they lock down cities, often they have a lot of the staff locked down or locked into their workplaces, and so much continues. There's been a certain amount of disruption within logistic chains. That's natural, but things seem to be working. It's just that there's a great deal of frustration within the population, and as that frustration grows, the risk of more demonstrations. In fact, there was a demonstration at one of the universities the other day, which is extremely unusual, when authorities moved in to close the campus. So we've got a little bit more political risk there. In fact, the Premier was talking last week about relaxing lockdown policies, but then his comments were apparently expunged from the internet, and it's all back onto full zero COVID policies again from the government. But this dynamic clearing, I think, offers a degree of hope. And yes, there are other major and significant issues going on in the world, but really it's just the focus on China for now that's moving metals markets. The copper market, or the big players in the copper market, I think, are generally short on copper. But there is good momentum here, because we saw copper going out of Shanghai warehouses or SHFE warehouses at the end of last week. That's quite a positive move. It says that manufacturers are restocking, looking to restart any manufacturing that's been slowed down, shall we say.
Yeah, and of course oil is the same sort of thing. I think they're sort of beginning to hope that there might be some more demand coming through from China at some point. Just wanted to talk a little bit about some of the other news headlines that we're seeing. There have been a warning shot across the bows, I think, overnight by President Biden, saying that the thought of China going into Taiwan could risk some sort of conflict from the US. Do you put much store in this sort of thing, or is this just rhetoric?
Yeah, we were surprised at this saber rattling. It seemed unnecessary. we don't feel there's any risk of China going into Taiwan just now. China, if anything, wants to preserve the integrity of its economy and the economic growth it's got. They are absorbing lots of Russian oil and gas at discounted rates right now, and they're using that to try and pull their economy back up to the 5% target. We've seen them down at 3.5% recently, so that's what they seem to be focused on. And I don't think China feels it's strong enough to go into Taiwan just now, and I think although that is a core Communist Party policy within the CCCP, they are still. I think they're still some years, if not at least a decade, off that, because I just don't think they feel that China is strong enough to manage the fallout from a move into Taiwan.
And of course, at the same time, we've got a growing NATO power, I guess, that China's also got one eye on because of what's been happening in Ukraine with Russia. Let me just quickly pick up on another headline as well. This with regard, it's a positive headline that we saw overnight, that President Biden is talking about looking at some of the trade tariffs that have been imposed by Donald Trump's presidency. This presumably could only be good news if it does run through with positive action, trying to drop some of the trade barriers that have been put in place.
Yes, I mean, these are seen as Trump-era policies and tariffs. But don't forget, actually, it was the Democrats and Republicans that both supported the tariffs being put onto China. And I think what they're trying to do is use the potential for to ease those tariffs to try and create a better relationship with China again and bring China back into the fold and persuade China that actually leaving Taiwan alone in future years will be the better policy for them. And remember, China will be looking at what's going on in the Ukraine and how the Russian equipment is failing badly in the face of shall we say, some NATO weapons and some new forms of warfare, and it isn't going to want to risk anything like that itself in Taiwan. It would not only be embarrassing, but it would set them back a long way. So I think China is certainly going to observe this very carefully before it ever moves on Taiwan, and I'm not sure it will for at least another 10 years.
Yeah. Let me just round it all off with a general market comment, if I can, because we've not spoken for several weeks. And of course, the markets, the indices have shown some real frailties around this. But if you look at the long-term picture, we are only just really retracing some of what some might have regarded as excessively optimistic upside that we've seen. How do you describe what's happening in the markets at the moment? You've been around a fair while and have experience of up and down. How do you put this into some sort of context?
Well, metals markets have been extraordinarily resilient. I mean, yes, they've pulled back from very high levels, but they are still at high levels. So if you're a mining company, you're still making extraordinary profits, whether it's from copper or tin or zinc or iron ore, lithium, graphite. Any of these prices are still at very, very high levels, particularly driven by the move into electric vehicles, the need to generate more electricity from wind farms, solar farms, hydropower, nuclear power. These are all energy-driven systems that are part of the climate change movement, also part of needing to rebalance where we get our energy from. We don't want to rely on Russia anymore. We don't want to rely on burning fossil fuels anymore either. And we want to drive electric vehicles to clean up our cities. So this is what's really supporting metals demand in the markets. And I think this is why we have this very substantial ongoing resilience.
Okay, John, thank you much indeed. It's been a pleasure catching up with you again. It's Sir John Meyer from SP Angel taking a look at what's happening in the markets on this last trading week of May.